Hello, everyone. We are live. All right. So, welcome to how to get funding and loans to buy a franchise. I'm excited to go into this today. We're going to talk all franchise funding, right? So, we're going to dive into exactly how to fund a franchise. This will be your complete guide on funding a franchise. And actually, regardless of if you wind up buying a franchise or not, everything that we're going to cover today in terms of funding is applicable for any business. Buying an acquisition, starting a new franchise, buying a resale franchise, buying a resale just regular business, even starting a business on your own. So, no matter which direction you want to go, this will help you in securing the funding you need. We're going to go really deep. I'm not going to hold anything back. Um, so I'm excited to dive in. Bear with me. I have a cough drop in. I am getting over a cold. I'm nasally congested, been sneezing all day, but we're pushing through, ladies and gentlemen. I try not to break my commitments. And we had a commitment to go live today. So if you want to show me some love and hit the like button on YouTube, since I'm showing up doing this sick, I would appreciate that. And if you want to just drop a comment, let me know what city you're chiming in from or watching from, or if you're watching the replay. So if you're watching the replay, drop me a comment and say replay. But so we're going to go into the exact different funding methods. We're going to talk about how to secure them. We're going to talk about specific examples of our clients and how they've structured their funding when they've bought their franchise, either new or existing, and at what point in the process you need to get your funding together. Now, funding is something that I have now a lot of personal experience with. And, the way that I learned all of this that we'll dive into, it wasn't from, they don't teach you this stuff in school. Maybe they do now later on. But they don't really teach you this stuff. I got started in financial services, and I worked as a personal banker, and then I worked as a business banker. And what I saw is that most business owners struggle with capital. It's one of the most common reasons that businesses fail, not able to get the capital that they need. And I would say it's one of the most common reasons why most dreams of businesses fail, because individuals don't know how to get the funding that they need, or they're not even aware that they actually have enough to get funded or have the resources at their disposal. Like, I see the question here from Ninja asking about how to get approved for an SBA loan. How do people get around the 10% equity injection? We're going to talk about that today. I'm going to dive into that, and some of the concepts we're going to talk about. We'll cover that. So, I learned all this stuff working with business owners. One, in financial services, I had my investment licenses for 15 years. And so I learned about all kinds of different loans. And then as I started my franchise, started learning and stacking all the different ways that you can do funding. So some of the things that we're going to talk about today, make sure you hang around because there's a couple of things that no one talks about in terms of not just business funding, but specifically franchise funding. No other video that you'll watch will talk about probably two of the specific methods that we're going to go over today. So quick story before we jump in. What happened was I have an experience with the fear and just the uncertainty that it comes to funding your business. So when my wife and I signed our first franchise agreement, we paid the $25,000 franchise fee, right? We paid it. It's paid. And then I went to apply for a home equity line of credit to fund the business, and we got declined. We got denied, declined, same thing. So that was, imagine that moment. Signing a franchise agreement and then going, holy crap, did I do this wrong? Did I do it too soon? What happens? What if we're not able to get funding? And it was a really scary moment. So we'll talk about that later on and how that all worked, and how you need to structure the sequence of what you do and how you do it, and all of those things. But I've started a franchise from scratch, bought a resale, We've helped our clients do it many dozens and dozens of times over now. So I got a lot to share with you guys. So I'm excited to jump in. Let me share my screen, move things around a little bit, and we're going to dive in deep. Hello, Mary from Texas. Window. Let's go. Let's go. All right. So we're gonna dive in. I'm not gonna hold anything back. Like I said, I'm gonna give you guys the best of the best. And really give you a deep dive. So it's completely free, doesn't cost you anything today. The only thing I ask is if you're watching on YouTube, if you can hit the like button, it helps show the video to more and more people. So hitting the like button doesn't cost anything, completely free. You literally just press the little thing. It helps out a ton, and I'm going to provide maximum amount of value that I can to you over this period of time. So let's dive in. Okay, so we're going to skip through some of this because some of this is actually in some of our modules for our clients. And I forgot that I had to go through all these things. Okay, here we go. So before funding, here are important things not to do. When you're going to fund a business acquisition, when you're going to fund a franchise, is don't leave your job yet. It's harder to get most loans without income. So wait until you've closed on your loan and received your funding, right? That's a pretty key point. Sometimes it may be too late. Sometimes you may be in between jobs, or maybe there's instances where people come to work with us after they got laid off and they're like, instead of, going back to another situation where I could get laid off again, let me start my own thing. There are options there. We'll talk about what those options are, but the options are definitely more limited without income. You're going to want income. There are some situations where you don't need income. We'll talk about those too. But ideally, don't leave your job yet. Even if you're really upset, wait till you get your loan. Also, don't tell the bank that you plan to quit your job. And if you're just joining, we're going to get into the different funding methods in just a minute here. But just going through the important things not to do, right? Because before you can get funding, you need to know how to prepare yourself to get funding or mistakes to avoid. So don't tell the bank that you plan to quit your job if you're going to be getting like a loan or an SBA loan. What you do after you get the money is up to you, but don't say, "Hey, I'm going to borrow $200,000, $300,000, $400,000 to get this franchise open, and then my plan is to quit." So all of the income that you use to approve me, that's going to be gone. So let's not have that conversation. And don't buy any huge purchases on credit. I think it depends on how you fund it. This may not be applicable overall, depending upon how you fund it and some of the ways that we're going to go over in just a minute here. But if you're going to get like an SBA loan or something that's running your credit on funding, then probably no major purchase is the best thing. Now, there is actually a very interesting strategy that some folks use when doing SBA loans that does involve credit, which we'll cover. Actually, that's an interesting nuance there. Don't take money out of your retirement account. Keep in mind, it's not tax advice. I'm not a tax advisor. But if you don't meet the criteria to take money out of a retirement account, I used to be a financial advisor. I have my investment licenses for 15 years. All I did was retirement advice, investment accounts, managing those things, rollovers, literally every day. I know more about that than franchising. So if you take money out of your retirement account, if it's a pre-tax account, it gets taxed as income. So if you made 100 grand this year and you took 50 grand out of your retirement account, and that's a pre-tax account, now, according to the IRS, you just made 150 grand that year, right? So boom, you're jumping up in tax brackets. Then two, if you're under the age of 59 and a half, there's a 10% penalty. So don't take money out of your retirement account or just withdrawing it. There is a specific way that you can use your retirement account to fund a business. And there's actually a way that you can use other people's retirement accounts to fund your business. So we're going to talk about those things. All right. But you want to make sure you're making decisions that don't have major tax consequences or huge taxable events. Oh, I just covered that. All right. I'm one step ahead of myself. All right. So in general, what do we, I think we're gonna skip that. All right. So let's start with SBA loans. Okay. So SBA loans are probably the most common way, not probably. SBA loans are the most common way that individuals fund opening a franchise. Okay. Now, depending upon what type of business you're going to start, SBA loans typically, you'll find that an SBA loan works great in the situation of opening a new franchise, buying an existing franchise, meaning one that's already up and running, or buying an existing business, right? So SBA loans generally can work for that. Here's the situation that SBA loans cannot work for. And if you're getting value out of this, again, totally free, costs you nothing, please hit the like button on YouTube. So it'll show the video to more people. And if you're new to the channel, please subscribe. That would be awesome. Talk about everything business, franchise money, etc. Now I just lost my train of thought. Oh man, that was dangerous. Shouldn't have done that, especially when I'm not feeling well. All right, SBA loans. So generally speaking, with SBA loans, there's a couple of ways that you can approach this, right? So typically, the SBA loan, let's just go over the basics real quick. Small Business Administration. It's not the SBA who's actually giving you money. The SBA is just the administrator. They're guaranteeing the loan. You're going to your bank or a lender. The lender's giving you the loan. The SBA is typically part of the approval process. I'm gonna oversimplify for all of you fact checkers out there, just to keep it simple. We don't need to go super down the weeds in here. But it's not the SBA that's actually giving you the money. It's the bank. So that's important to note. The SBA is just guaranteeing a portion of that loan if you were to ever default. So typically, you'll make a cash injection of 20 to 30% of the loan amount. For example, and you'll see it here, if the franchise ranges from $200,000 to $300,000 to get open, the lender is going to ask you to put down, and most of the time it's really 20%. You're going to need to put down 20%. So if total cost to get open for the business, 200 grand, you're going to need to come up with $40,000. Now, Ninja's question in the comments are, hey, they're asking me for 10%, which is lucky you. You must be buying an existing business, I'm guessing. Reply and comment and let me know. I'm curious. Because most of the time for a new one, it's not 10%, it's 20. But with resales, when you buy a resale business, you can often get it for 10%. I remember what I was going to say before, is that you cannot get an SBA loan on a business that is losing money. Okay. So if you're looking at buying an existing business or an existing franchise resale, if it's losing money, you will not be able to get an SBA loan on it. The business needs to show profitability and cash flow. Not only does it need to show profitability and cash flow, but it needs to show that it can still make money even after your payments, your SBA loan payments. So it needs to be able to cover what's called the debt service. All right. With SBA loans, sometimes the banks will put a lien on your home for collateral. Most of the time, they will ask to put a lien on your home for collateral unless you have a significant amount of assets. So the strategy that I was telling you guys is sometimes people will get a home equity line of credit on their home first. So that way they're securing their access to that equity, and then they get their SBA loan. So then you have your mortgage as your first lien position, your HELOC as your second lien position, and then your SBA loan as your third lien position. We're starting to get into the weeds a little bit, so I'll move on. If you like getting into the weeds, let me know in the comments. Some people get bored by some of the technical stuff. I'm a pretty technical person. I like going into the technical stuff, but we can keep it rocking and rolling. The second way of funding is ROBS. ROBS. So this stands for Rollover for Business Startups. And basically, this is a way that you can use your IRA or previous employer 401k to fully or partially fund your business. And so most of the service providers, this is a fairly it's a pretty complex way to fund, because a ROBS has to be set up in a very professional manner. And you'll need to use a service provider. They typically charge $5,000, about that, in order to create the ROB structure for you. You have to have a 401k, and the 401k is attached to the LLC, or I'm sorry, the corporation. There's a lot of nuances to it. But the good news is that for some of you who go, okay, I want to get an SBA loan, I don't have the $40,000, $50,000, $60,000 for the equity injection sitting around, or I have access to it, but I do have, $40, $50, $100, $200, $300,000 in previous employer's 401k plan or in an IRA. Then you're able to, then you can use your retirement account, which is pretty cool. So for this to make sense, you should have at least 70 grand in that retirement account, just with all the fees. But it's potentially a great way. And I would say one of the most common ways that people get access to that 20% that they'll need for the SBA loan. Let's see. Ninja said it's a new business, but the company I use works with a bunch of different lenders. I think it was also a minority loan benefit. Okay, cool. Yeah, and you'll find that depending upon your financial strength, number one, and number two, the lender, some of them only ask for 10% equity injection. All right, so this is ROBS, right? So this is how to use, you can't use ROBS with a current employer 401k, because you can't move that into a 401k. Technically, unless you're over 59 and a half years old. This is the financial advisor knowledge coming in. Then you can do what's called an in-service rollover. For those of you who are not 59 and a half years old, you cannot use your current employer 401k. You have to use a previous employer 401k or money that you have in an IRA, and then you can use your retirement account to help fund a business. Pretty cool. I'm actually not a huge fan of ROBS personally. I wouldn't do it. I would go many other directions. Like, we took out a home equity line of credit on our home. Everyone's different, has their own risk tolerance. I just did a group call with our clients, and one of the individuals who she owns her franchise now, she funded it with ROBS. She would rather go ROBS and use a retirement account before taking money out of her house. I would like to do opposite. This is why there's options, and we're going over all of them. Because what you feel comfortable with, I may not, and vice versa. So there is another way to use your retirement account, or to use someone else's retirement account to fund your business. So if you don't have money in a retirement account, you can use someone else's retirement account. They can use their money. I'll tell you about how to do that in just a minute. All right. And yeah, if you have questions, drop them, and I'll start addressing them for sure. By the way, what do I let's see. For those of you who are, if any of you are looking at franchise businesses and you're trying to find the right franchise, quick commercial. You can go to franchiseempire.com/newsletter. And every week we show you and dive into franchises. We show you exactly how much it costs to get them open, the franchise fees. We break down the business model. We show you how much they're making. So definitely go to franchiseempire.com/newsletter to make sure that you're subscribed for that, and you can see those. Okay, so this is the next way to get funded. This is a way that no one really talks about. And this isn't for everyone, because you got to have money and assets for this option. But some of you watching will, and someone may, right? So if you have a non-retirement investment account, just a regular investment account where you're investing in like stocks, mutual funds, bonds, different things like that, but not in a tax shelter, then you can actually take out a loan against that portfolio, right? It's pretty cool. This is probably, outside of cash, this is the fastest way that we've talked about so far to get funding. Again, you have to have the money. But if you have an investment account, then the way that it works, your investment account has to be with an investment firm that allows you to do this. And then you'll have to apply. So as an example, my wife and I, we have accounts at Morgan Stanley. So Morgan Stanley does it. Merrill Lynch does it. A lot of the big providers do it. Fidelity has it. You just have to call up their customer service and ask them, hey, how do I apply for, and they all have different names for it. At Morgan Stanley, it's called a liquidity access line. But basically, if you have $100,000, right, this example here on there, if you have $100,000 in an investment account with stocks or mutual funds or bonds, then you can take out typically around 75% of the value of the account, and they'll give you a loan against your investment account. Your money stays invested. It stays in those exact stocks. They're holding that now as collateral, and they're saying, here you go, here's $70,000. And then you can set up to pay only interest only a lot of the times too. So your payments are really low. And the interest rates are typically going to be lower than what you can get for an SBA loan, right? Because it's secured by your collateral that's in the account. So it's, in a sense, a lower risk loan. The reason why interest rates are higher or lower is based on risk, right? That's why if you have poor credit, you get a worse or higher interest rate. So this is a really cool option. I want to keep, for whatever reason, I want to keep talking about it more, but I think you got the gist. You guys have questions about the investment loan option? And I'm going to answer. I see your questions coming in. I'm going to answer them at the end. So please keep dropping your questions in the comments. I will definitely answer those at the end. And if you're watching replay, go ahead and ask your questions because I'll keep up with the video. All right. So the next thing, cash. All right. Duh. This is self-explanatory. Just because you can pay cash, but it doesn't necessarily make sense for you to do that though, right? So my recommendation would be, like, sometimes we have people that we work with where, let's say they're going to get involved in a franchise where it's, whatever amount it is, but let's call it 200 grand to get up and open. And this person has, for whatever reason, $400,000 or $500,000 in cash. But maybe you're thinking, I don't want to use $200,000 in cash to fund the business. I'd rather keep that nest egg and maybe I want to use it for other things. So the good news is, if you have the cash, you can use that as your equity injection, still get an SBA loan or combine it with any of the other options that, that we have, right? Right now, cash is actually earning, you're talking about, 5%. You can get in a savings account now, which wasn't like that for a long time. Unsecured loan. So an unsecured loan is exactly what it sounds like. This loan has no collateral, and because it has no collateral, there's typically a higher interest rate, right? So part of the reason why a home equity line of credit or other loans or a mortgage, right, has such a low interest rate is because your house is collateral. Like if you don't pay the loan, they can take your house. So with an unsecured loan, there's nothing for them to take. It's just based on, you're getting approved based on your credit and your income. So for these loans, you have to have good credit and you have to have a good debt to income ratio, right? Most of you are probably familiar with that term. But the interest rates are going to be much higher on these types of loans, on unsecured loans. These are pretty quick to fund too, by the way. So if you're someone that has strong finances, you have a strong credit score, strong income, and you don't have much debt, so you have a low debt to income ratio, unsecured loan could be a way to go to get really quick funding if that's what you needed. Or last case scenario too. I mean, we had a client that he's like a COO of a company, makes really good money. He did an unsecured loan and he was very happy with it. And some of these unsecured loans, you can get up to $250,000, sometimes even higher for an unsecured loan, which is pretty crazy if you think about it. Yeah. I think I told you that I'm a little bit under the weather. I got to blow my nose. Give me one sec. All right, there we go. So if you're watching this, I'm doing this sick. Give me a thumbs up on YouTube so more people will see it. Thank you. Appreciate you. All right, let's go over the next one, which is a HELOC. HELOC is one of my favorite forms of funding. Actually, I just like it because of the flexibility. Now, and there always will be like haters or trolls whenever I make any sort of content or do a video and go, well, I don't have equity in my home, or I don't. Well, we're going to cover a bunch of different options, and hopefully, um, you'll be able to take advantage of one of them depending upon your financial situation. If you have no money or assets whatsoever, we'll talk about that too. But home equity line of credit, you need to own a home, right? And you need to have equity in your home. And this is how my wife and I funded our first franchise. So to piggyback to that story, so what happened was we applied for our first HELOC with Wells Fargo. That's where we had all of our accounts with, and they declined us. And then I applied again with Chase, and Chase approved us. For whatever reason, their underwriting was, I guess, a little bit different, but Chase approved us. And so ever since, I've used Chase for all of my business accounts. I love Chase. I've been happy with Chase. They've treated me very well. And I actually got a business line of credit with Chase recently. Well, that's one that we'll talk about in a little bit. Business line of credit. Most people can't use it though, because you have to have an existing business as 2 years of records. Actually, I didn't have to show my tax returns or anything because of my history with Chase. It actually worked out pretty cool. It was pretty easy to get that. So, by the way, my wife and I have tapped into so many of these different funding methods. So currently on our investment portfolio, we have the liquidity access line approved, ready to rock and roll, just sitting there waiting, for us to use it for something. We have another home equity line of credit right now for $300,000 that we have access to like that if we need it. Then I also have a business line of credit for $150,000. These are just lines of credits. The reason why I'm sharing this with you is because the beauty of a line of credit is it works like a credit card. If you're not actively using the credit, you're not making any payments. You're not getting charged any interest. So currently I have 3 lines of credits: home equity line of credit, the liquidity access line on my investment portfolio, and the line of credit on my business, on my current business entity. And I'm not using any of it, so I'm not making any payments, but it's there. I think I have access to like $600,000 worth of funding through all of those different things. So that's one of the reasons why I like lines of credits, because for a home equity line of credit, if you use the equity, you could get a $400,000, $200,000 line of credit, but you only pay on what you use, right? So I think that's a huge advantage. And then there's a 10-year draw period, meaning that you can keep paying, you can keep using and paying back for 10 years. What just happened? Okay, that was weird. Do you see that? The screen just disappeared for a second. Well, I think the Wi-Fi may have gone out for, Can you guys still see me and hear me okay? Will you drop a comment and let me know? The screen just like flashed out for a second, and I'm seeing some sort of Wi-Fi signal as if I don't have great Wi-Fi. Interesting. Okay, I got a thumbs up from Mary. Thank you. That totally broke my pattern again with home equity line of credits. If someone wants to remind me of what I was saying, I can jump back to it. I know there's a little bit lag when I can see the comments, but basically a home equity line of credit. Oh, the draw period. So kind of like a credit card, like when you pay off a credit card, you get to use it again. A home equity line of credit is the same thing, right? So if you take out a loan on your home equity line of credit and your business does really well and you pay it off early and you're still in that 10-year draw period, which is what most of them have, you can just keep using it and you can use it for other things. After the 10-year draw period, it turns into a 20-year repayment period. During that 10-year draw period, you only make interest-only payments, which is pretty cool. So it keeps your payments low. So what happened with us, we took out our home equity line of credit, used about $300,000, a little bit over $300,000 to open our first franchise, build it out. And our payments were a lot lower because we were just making interest-only payments. So having a lot lower repayment helped us cash flow early on. That was one of the things that helped us cash flow from the business within 2 months. And then less than a year later, we moved and we sold our house. So the line of credit got paid off in the sale. So then now that was it. The business was completely paid off, and we weren't making any payments on it. Now, I guess that would be a potential downside, is that, if you do sell your home, it has to be paid off. And now, you're not leveraging debt anymore. But at that point, there's some other options. You can apply for a conventional loan if the business is profitable. Blah, blah, blah. Let's not go down the rabbit hole with like too much stuff. All right. Friends and family. So, believe it or not, a high percentage of businesses are funded by friends and family. Now, so you can leverage outside investors, or just borrow money from friends and family. You can do it informally. You can do it formally. You can have a promissory note that's signed and notarized. You can run their credit. You can make this as informal and formal as you need, right? And so don't count it out, because when you read some of the stories about some of the biggest tech companies, they get loans from friends and family, and they raise capital from these people. So it's something to consider. And we'll dive into now how you can use other people's IRAs or retirement accounts. It's something called a self-directed IRA. So the way that I learned about this was, I used to work for a company. I told you my background is in financial services. I used to work for a company that this is what they did. They were a trust company, and I oversaw half of the company, all of their institutional division. And so the way that it works is that if someone else has an IRA and it's in a self-directed IRA, you can use to invest directly in real estate and basically what's called alternative assets. So as long as the person's IRA is with the self-directed IRA company, and they can move it, it doesn't have to be with it when you identify that. Like, they can then move it to a self-directed IRA company. Then they can loan you the money out of their IRA that you can then use. They can write it as a loan, as a promissory note. So that's literally just like a loan that you're paying interest and making payments on. Or they can do it as like an equity investment into the business with you. So there's some different ways that it can be done. It's actually really interesting. And so maybe the question's like, why would someone do that? Why would someone lend me money out of their IRA or their retirement account? Well, it's a good question. So as an example, maybe they go, hey, which is reality, stock market's at an all-time high right now. They've been riding gains for the last, my goodness, 10 years in the stock market. Their money's tripled or quadrupled. And they go, I'm getting nervous about keeping my money in all these stocks because I don't know, maybe the market can go down. I'd rather put it in something different. And, yes, right now you can't put it in just regular kind of like money market accounts that earn 5%. But what happens is they can loan it to you for, let's say, 8 or 9%. That's what they write the promissory note for in their IRA. Basically a loan agreement, promissory note, loan agreement, same thing. And so it's a win-win, because right now SBA loans are around 11 and a half, sometimes 12%, depending upon the lender. And so if that person can only get 5% in a savings account, but they go to you and say, hey, I'll loan it to you for 9%, because they really believe in you and you're a reliable, responsible person. And so it's a win-win. You get a lower interest rate and they get their money invested into you, and you're making them payments, and those payments are going back into their IRA. Pretty interesting. Pretty interesting. Oh, yeah. So everyone's perspective on this is different. Some people cringe at the idea, and for others, it's no brainer with friends and family, right? Regardless of how you feel about it, it's good to be educated on all your options. I forgot, it's been so long since I created this presentation, so I forgot that all this was in here. I pretty much skipped out on I was saying this, but have a formal loan agreement, such as a promissory note. I would make it formal personally. I would make it formal. That's what I would do. All right. So let's take questions. Let's take questions. By the way, for those of you who are just watching, you see the banner at the bottom with the franchiseempire.com/newsletter. We put out a newsletter once a week with specific franchise options, show you how much money you can make with them. They're really interesting stuff. We show you specific resales in specific areas. But before we go to Q&A real quick, we'll drop the newsletter banner and we'll say, for any of you, if you've been for most people, finding a franchise is really overwhelming, right? They're Googling online, trying to search what's the best franchise to buy. What do I do? We hear it all the time. It's overwhelming. It's confusing. I don't know who to trust, so on and so forth. So if you would like to see, get a custom list of franchises available in your specific area that you qualify for, you can set up a free 15-minute call with our team. You go to franchiseempire.com/check territory, and our team will meet with you, find out what area you're in, what you would qualify for. And we're constantly researching what are the best franchises. We're looking at the FDDs. We're looking at the numbers. We know some of the ones that validate well, meaning the franchisees are happy or not happy. So you can go there and submit that and be able to set up a call for free. Now, let's hop to the questions. So to jump back to Ninja's question around how do I get around the 10% equity injection that they want for the loan? Well, there's no way to get around it. If you don't have it, the question is, can you access any of those other things that we talked about to get the 10%, right? So do you have it in your retirement account? Can you pull it from there? Do you have it in home equity? Can you borrow it from someone and get a line of credit, so on and so forth, right? But some people do take out loans for the loans. It depends on how much you want to leverage yourself. I mean, that's a risky bet there. But yeah, just depends on how much you want to leverage yourself. The other option, here's another option too. If you're with an employer that does have a 401k plan, you can take a loan against that 401k plan. The tricky part is, though, if you leave the employer before you pay back the loan, it becomes taxable. And it would count as like a distribution. So, all right, let's see. What other? So Mary has a question. If you apply for SBA loan yourself without the bank, do you still pay for the 20%? Or will they put a lien on your house? All SBA loans have to go through a lender. So it may not be a bank, but some lender has to be the one that lends the money. So the SBA is not giving you the money directly. And so, yes, there's going to be an equity injection for SBA loans. Here's the only exception. There actually is an exception to it, is when you buy a resale. If you can get the seller of the business, if you're buying an existing business and there's enough cash flow to support an SBA loan, you can get seller financing of 10% from the seller of the business. And then the SBA will loan you the remaining 90%. And then you're buying a business with no money out of pocket. That's the one way to do it. But that's only with an existing business. And the business has to be profiting and cash flowing enough to show that it can support both debt payments. In terms of will they put a lien on your house? Most of the time they're going to they want collateral for the loan. So many times they will. Let's see. Jace, Dad, I went through bankruptcy. I have no clue how to get funding without a partner, which I do not have either. I feel stuck. Yeah, that's tough. I mean, you went through bankruptcy, right? So, what that means is that your track record of paying people back is not good. It's just an objective answer, right? So, yeah, it's going to be a tougher road for you, 100%. I get that you feel stuck. But how can you get some traction, right? Maybe get some snow tires, get out of being stuck. That's a terrible dad joke, but you're going to need a partner, and it's just about finding a partner. So I believe that it's not necessarily about the resources, it's about the resourcefulness. Many people didn't have the resources to start their business or to do what they're doing now, and they just get resourceful. So the question is just really how resourceful are you willing to get, in pitching people and being aggressive. I find that when people really, if their back's against the wall and they need it and want something that bad, you will find a way. When there is a will, you will find a way 100%. So get out of that stuck energy, right? It's easy when we tell ourselves we're stuck, it creates a certain energy and we act within that belief system. So when you tell yourself, hey, there's a way, there's a way, there's a way, your brain starts thinking of ideas, you get creative. And it doesn't mean that it's going to work at first. You might have to face rejection. You might have to talk to 10 or 15 people and ask them to be your business partner and say, hey, will you put up the funding? I'll operate the business and so on and so forth. Maybe you get 10, 15, 20 rejections before. It has to do with how bad you want it, how committed are you. Denise said, I heard there are unsecured loans from major lenders for new businesses for up to 50K. Have you heard about? Yeah, I've heard more than 50K. I've heard about people getting a few 100K in unsecured loans. 100%. All right, that seems to be the last of the questions, ladies and gentlemen. Thank you so much for tuning in. Again, if you want or need help or resources in, finding a franchise, go to franchiseempire.com/newsletter and make sure that you're you can just go to franchiseempire.com too, because we have free resources on there. But franchiseempire.com/newsletter. Oh, we have something special being launched on Monday, by the way. So definitely hop on that list. You'll want to be in it and see the announcement. And on Mondays, we do the video newsletter of the franchises. So stay tuned, subscribe, like, all that good stuff. Thank you for tuning in, and I hope you have a wonderful day.